Hello and welcome to another episode of Blue Alpine TV. In today's episode, we will talk about the Tether controversy and whether it's actually not really a controversy. So let's jump right into this news story about Tether. For those of you who are new to this channel, first of all, you have to subscribe to the channel. We always analyze cryptocurrencies here and we dive into really interesting news and really look at it from an investor perspective. Now, if you're new to this topic, you might not know what exactly is going on with Tether. Now, Tether is a cryptocurrency startup. May or may not be connected directly with the cryptocurrency exchange Bitfinex. They have the idea that is that Tether is essentially one-to-one backed by $1, meaning if you are buying one Tether, you would have it backed by $1. It's kind of a stable coin, and it is used by multiple cryptocurrency exchanges. However, there was, since about December, there are a couple of rumors going around that Tether is actually not backed and is printing tethers without actually being able to back them up in hard currency. Now, this controversy has been going on for a couple of months. There was also kind of an audit that was happening for Tether, and then the Tether company actually stopped the audit and said no more. So this is obviously a lot of bad signs that came together, a lot of rumors, a lot of things like these. Before we jump into this news story, there was also a research paper, 66 pages, by the University of Texas at Austin in the Department of Finance, where they have looked into Tether, and they came up with the fact that Tether is actually not backed one-to-one with the US dollar. They are basing this on different data, looking at kind of the blockchain data in order to kind of make this claim. But today actually came out a very interesting report. So released today, the report is a product which is it's a 3-page report by Free Sporkin and Sullivan LLP FSS, a legal firm founded by 3 former federal judges, including a former FBI director. Now, they are saying, and for the podcast listeners, we're currently looking at this 3-page document. They are saying that they have had access to the Tether banks at different types of stages. So it says here, the FSS said that it conducted the review of Tether's bank accounts on June 1st without giving the firm prior warning, and found that the assets in Tether's bank accounts exceeded USDT's outstanding market cap by approximately $7 million, suggesting that the token is fully backed by physical dollars. Now, $7 million might sound like a lot, but considering that the market cap that we're currently looking at, and we're looking at for the podcast listeners, we're looking at 289 billion in market capitalization. That's actually not a lot. So 7 million is a very, very small amount considering that. They're saying as part of the engagement, FSS was able to confirm the US dollar USD balances in accounts owned or controlled by Tether at its banks, including selecting the appropriate confirmation dates and reporting to Tether as to the results of such inquiries. As per the letter of engagement, FSS selected the dates for balance confirmation without prior notice, that's important, to or consultation with Tether, the firm wrote. So obviously, if you're doing audits or small tests or just looking at the bank accounts of these companies, you don't want to do this by saying, well, we will come on Tuesday, because technically they could play with the data or play with the bank accounts and move money around. So this is kind of why they are mentioning this. Now, I'm not really sure, like for you as an investor, what does that specifically mean? In my opinion, it doesn't. I mean, the really weird thing in my opinion is the whole audit story. Like, if everything is backed and correct, why not actually audit or let a big company audit Tether. Now they are saying the company claims that the reason it has not undergone a full-scale audit is that the major accounting firms do not want to incur the risk of performing this service for a cryptocurrency firm. I am actually not really sure whether that's true. Could be, could not be. So that's kind of the main bitter taste that is still left, in my opinion. Yes, this report looks pretty legit. So obviously the Friedman LLP looks like a legit company that did a legit kind of a test or semi-audit, if you will. And the balance sheets looks okay. However, that doesn't really prove a lot of things. It could still be that money has been moved around, or this was kind of a marketing plot, or all of these things. Of course, like, this is full disclaimer, I don't have any data on this being true or not true. But at the same time, for you as an investor, I still believe as long as this Tether controversy isn't fully cleared up, I wouldn't keep a lot of money in Tether. Tether is still, it is a stable coin. It is an interesting stable coin. It has stayed fairly stable in the last couple of months. But at the same time, the controversy and kind of rumors around it are still a bit of an issue. So that's why I wouldn't keep my money or my cryptos in Tether. First of all, don't keep it on exchanges. And second of all, don't keep it in Tether, in my opinion. Nonetheless, fairly interesting. I will link this up so you can give it a read, actually. But it doesn't say a lot more rather than the kind of 7 million US dollars that are, if you will, missing or too much. Now, technically, that's very good news. So for the market, ETH is not a security, Bitcoin is not a security, Tether is legit. So why doesn't the market go up? Well, that's because markets are not rational. Markets are quite irrational when it comes to these things. And it just shows you that news alone cannot drive price. Yes, news can influence price at certain times. However, if there is no demand, if the volume is low, and if people are not investing and putting money into cryptocurrencies, and some of them will say, well, because there is no kind of application for cryptocurrency yet, so I'm not seeing it from an investment perspective. That's why the demand is not there. That's why we're not seeing the gains. That's why we're still not seeing the bull run coming. Now it will come. It will be bigger than we all thought, probably. And it will look definitely different than we all thought as well. And with that, guys, we're already at the end of today's episode. Make sure to like this video, subscribe to the channel, subscribe to the podcast. I will see you on the next one. Take care. Bye-bye.